Brad, there's something that we call tech, and then there's all of what tech encompasses. So it's really hard to talk about it, in general terms, obviously.
Right.
But just bear with me for a second. So you point out that a lot of private companies never really got the valuation they deserved in terms of being marked down, and then they're public, so they already inherently had these very high valuations. So a lot have now come down. Is it coming down? Are they coming down because of all the Fed money that was propping them up, or are they coming down because the environment is now changed and there's a bad operating environment for those companies?
I would say more the latter. So the first problem is, and VCs across the board, including me, are guilty of this, which is we keep raising bigger and bigger funds. And as a result, we have to write bigger checks to our portfolio companies to make the fund math work, which means the valuations have to go up. So I would say startup valuations from Series A all the way through to the IPO have been artificially inflated for at least the last couple of years. And the public market's actually generally been right when they've knocked these companies down a little bit, because we are valuing them too much. The second problem is we've had this growth at all cost mentality for like a decade now. And I think we're finally starting to realize that growth and more customers is not the same as profits. And as that mentality shifts, it's going to impact the entire tech sector.
The advertising angst from Snap, that's like a macro effect of just inflation and overall economic worries, isn't it? That you become less of a tech company and more of just like an advertising company.
Yeah, for sure. I mean, also, as you said before, the phrase tech is so broad. I mean, every company is a tech company, right? Whoever made the cup of coffee sitting, the actual coffee cup sitting on my desk right now, used technology in some way to make it. So, right, you can't even sort of say just everything is tech. But yeah, look, I think Snap has a couple of reasons. One is, like you said, advertising revenue is down. But two is, and this is true whether it's Snap or Facebook or Twitter if it stays public, social media is a very double-edged sword. It can be very profitable because it attracts a lot of people, but at the same time, it is an inherently kind of toxic platform that, if you want a safe bet, I don't think you'd want to be investing in a social media company.
And then social media, is there any other way to monetize it other than advertising?
Yeah, there are a few. I think one is payment processing. So a few years ago, if you may remember, Facebook tried to launch something called Libra, which would have been kind of a payment system on their network. They needed congressional approval. They never got it. But they were looking to sort of supplant advertising revenue with payment processing, and also marketplaces, depending on what you do. Most of the companies have left that to Amazon so far. But in theory, my 13-year-old son is on Snapchat. If there were, things he cares about, like sneakers and video games on a Snap marketplace, he'd probably use it.
Can we find some safety and still participate in the future of tech by buying company? I don't know, maybe NVIDIA. Are the guts of tech still good? Are they never got to the overvaluation? Is that how you do it?
Yeah, for sure. I mean, I think there are tech companies that produce a product that's of real value and they sell it at a high margin and they make money. Those are good investments. They were before, they are now. I think where it gets trickier is the tech company where it's like, well, they're not making money. We're not really sure how they'll make money, but it seems so cool. And they got such a high private valuation that we should invest in them anyway. My general rule of thumb is if you don't understand why a company should do well, it's probably not that you're too stupid. It's that, it doesn't make sense.
Just real quick, we got about 25 seconds. Are you closing some of the windows, hunkering down, bringing some wood in for the winter in tech? No?
Yeah, the opposite, right? So I'm an early stage investor. Valuations are down. I'm deploying capital like crazy. To me, this is a really good time to be investing, both because valuations are lower and you have a little more leverage than you had 6 months ago with founders. So yeah, we're investing as much as we possibly can.